The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to have Cy Monley on from Sylvius Financial at the half-hour break. Tomorrow will be a special show. We're going to have the Wolf Trader. Shane Smolian will be on for the whole hour. He's got some really great astro information for us to listen to. And, of course, he knows he's a specialist with his Fed juice, so he'll be on the show tomorrow. The first chart we want to look at today is this DAX 4-hour chart. There's several things that I think are relatively important here. As you can see, the low that we made just a little while ago on the 15th came in at a 786 retracement. We've now come down and tested that for the second time. If we get much lower in the DAX, folks, this is going to be a big breakdown because you're looking at a consolidation that's taken almost a month to occur. And it did make a nice ABCD pattern there at the high. So watch that. It's very similar that we have in the U.S. stock market. There's very little difference there. But the real importance today, folks, is not the is not this stuff that's going on in the let's try it again. The stuff that's not going on in the stock market, it's what's going on in the foreign exchange market, because that's where the key is coming from. One of the things that I focused on here in the newsletter over the past week was to watch the possibility that there was a bottom in the euro based on this 16-year cycle. We're ready to take out the highs of just a week or so ago at around 1290. That's going to be very important. I think that's similar to what we did, you know, when the Treasury bonds took out the 157 level. They've since, backed off quite a bit from there. But this could really have legs in the euro, folks. I mean, we could get a rally to go to the 128 level, and it would still be bearish. So the other thing is, if it gets to that, 113 level and then reverses, it's nothing more than a fake out. Those of you that happen to be, I was not one of them, but I think it was, I don't know, I can't tell for the exact time, but it was around 1 o'clock in the morning, Tucson time, that Draghi was speaking, so that had to be early in the morning in Europe, and it rallied the euro 100 pips. That's a huge amount. But the other currencies are still doing the same thing. The key to this, folks, this is just my opinion. Let me just show you what I'm looking at here, because this is going to be really important for a couple of different reasons. If you look here at this U.S. dollar index at this 96.50 level, we hit there twice. We had the big reversal, and today we're back down to 96.50 again. Now, that 96.50 is the long-term 61% retracement on the weekly basis. So if we break that, that could mean that this is a cycle failure. In other words, it rallied for just 5 days, and then down it goes. So there's a possibility these currencies, could have some pretty strong legs here against the U.S. dollar, and the weakening of the U.S. dollar is going to affect everyone. But the only way the U.S. dollar gets weak is if interest rates go lower, and that doesn't look like it's going to happen. And the reason why we say that is because we have been following this chart of the U.S. dollar. Let's do this one at a time. We'll show where we were yesterday. Here's the chart of the dollar. Wow, Larry, just a minute here. Wake up this morning. Here's the Treasury notes versus the Treasury bonds. The Treasury bonds is in the blue line. You can see the breakout to the upside. You can see the June Treasury. Wow. Timeout. You can see the September Treasury notes making the 61% retracement, and now what you're looking at is you're seeing a market that could be ready to turn down. That was as of yesterday. And if we take a look at this today, we'll put this up here, and we'll look at it. You'll see that, put this up here, we'll see a little bit clearer picture of it. You'll see here that you've got the Treasury bonds have broken. We're now below the breakout level. And not only that, but look what's happened to the Treasury notes. If you see that dark line there, I just wanted to show you that it was the same price in June that it was here in yesterday, and that's basically a head and shoulders pattern. If that's the case, this thing could have a big move to the downside. So keep an eye on that. That's something that you want to watch, because that's real money, folks. And the Treasury notes, as we mentioned many times, is 5 times what it is, with the Treasury bonds. Open interest and the volume is much bigger. And most of this is, there you're correct, folks in the den are chatting, this is basically the European Central Bank is doing this, just like our central bank does it. It does the same type of thing. Now, the next one that we want to keep in mind here is there also this possibility here, and believe me, it's just a possibility, and this is that chart we were looking at with the E-mini, Dow E-mini, daily chart. And as you can see, the harmony that's there of those cycles where we had 22 up days, the ABCD patterns, and the 1.618s. There's a possibility, of course, that there could be a major spot here as far as where we're going to be looking at the breakout if we get that in the E-mini S&P, and I'm not sure we are. It looks like it's could be in serious trouble. All right, let's move on to what you folks like to look at, and that's gold and silver. We're going to look at silver first because this is what happened yesterday. We'll pull this up here. You'll see that, just 1 second here. Something happened to the old, there we go. All righty. Okay, here's the silver, is what we were looking at last night. You had an ABCD rally. Stopped exactly at the 786, but the one that is really interesting, and you could just write a book about this stuff. This is the gold chart. This is the August gold contract. As you can see, we had that $34 break to the downside, and what did we do? We rallied exactly $17 an ounce to get to the 1253.5 level. We're down a little bit from that level, folks. If we get above 1255 today, this could mean that we are looking at a potential really big bottom in the gold at the 1236. But we needed to get it at least up to about 1256 would be my guess. That's what I would be looking at as far as the best place to looking at it. I will take a look at the platinum here after the break. I'm not able to pull this up at the same time, and we'll see if it's going to be, we'll be able to look at platinum to see what it's doing. Palladium I do not trade, Dave. I'm sorry about that. I've never traded it, and just so many other things that there's to do, and palladium is a relatively small thing, so remember. Okay. All right, let's move on here. By the way, when we're talking about these currencies and what they're doing, these foreign banks can move the market 100, 200 pips without any trouble in the euro. But believe me, folks, unless they're ready to come in there, it's non-sustainable. That's pretty much the bottom line. So we got to keep an eye on that. 877-927-6648. Wow.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and one of our listeners was kind enough to share us this chart, which is the S&P 500 Shiller PE Index. In other words, it's the price-earnings ratio of the stocks that we look at all the time, and this goes back a long time, 1881. That's 15 years after the Civil War. You can see there's only been 3 times where the PE ratio has been able to sustain 30. And we're right at 30 again, as you can see from this chart here at 2017. What's interesting about this is if you do the expansion ratios here between 1901 and 1929, you'll see that was a 1.27 expansion. And if you see the one from 1929 to 2000, that was a 1.618 expansion. If you'll look at the retracements, you'll see multiple ABCD patterns plus the ratios that we look at, which are 618 and 786 for contracting ratios, and 1.27 and 1.618 for expanding ratios. Now, whether this means anything about stocks or not, it just shows you that on a very long-term basis, going back 140 years, you're looking at something that is very unusual. Much like that peak at 2000, that was the dot-com bubble. That was such an easy one, folks. That was a once in a generation, and those of you that are around 17, can you believe it's been 17 years ago? And 20 years ago, Harry Potter came out? Give me a break. I can't even believe it's been that long. But where does the time fly? Speaking of time flying, I'm going to be doing the show tomorrow evening for TFNN. I'm basically going to go through an autobiographical sketch of my trading and history of the people that I've met over the years, and I think it'll be a fun evening. And if you have an interest, just type in www.tfnn and go to their homepage, and they'll give you some information on how to look at this. But just remember that it is all probabilities that we talk about here. There's never any certainties. Now, we were looking at the crude oil market yesterday around that 43 level. So far, we have hit it. We got up to almost 44 early this morning.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back here at Tucson, Arizona. I'm having some technical problems, and unfortunately, looks like we're not going to be able to have Saeed only on today because of technical problems. We'll have him on another time. Folks, I'll tell you, all of my frustrations in this business are related to computers, and unfortunately, we're just not able to get this thing working. I'm not able to access the den, so we'll do this certainly at another time. I believe we've got a commercial coming up here pretty quickly, but we'll be watching these markets this morning early, and we'll see, what's going to transpire with them. But remember, this 113 level on a closing basis is very important in the euro because this, if it fails, it could really be, something dramatic, and also if it has power to get above 113 in the euro, that's it. All relates to the U.S. dollar closing below 96.50. That would be a major cycle break, especially after a 2-week bottom. That would not be a very good sign. So watch this very, very closely. Those are the main things that we're keeping an eye on this morning. Okay, folks, I guess we're back on live. Since I have no idea where we are or where we're going, we'll just chat about some of these markets. I just can't say strongly enough what we're looking at here with this 96.50 level. That's the main thing that in this U.S. dollar index. It just means a great deal. I posted the chart here earlier in the den that is relatively important. Now, also the Treasury bonds and Treasury notes, the chart that I posted there this morning about a potential of a breakdown in bonds, i.e. higher interest rates. And if higher interest rates come, that usually means that the U.S. dollar is going to strengthen, and that's the exact opposite of what we have going on right now. We have the interest rates going up in the Treasury notes and Treasury bonds, and we have the euro going higher. That's a very large aberration, and it could be the works of Mr. Draghi speaking, but even then, we don't know the answer to that. So those are the main things that we're watching right here. I just don't know what to do right now because I don't have any questions coming in. So I guess I'll just continue chatting here a little bit, and we'll see how some of these things work out. Oh, well, that's about it. Well, I really don't know what to do because I'm lost. No questions coming in, so I'm not going to. Someone's asking me a question about talk about the crude oil, folks. The crude oil had a really strong buy in crude oil, as you recall, at 43 level. If you do a little bit of work yourself here and take a look at the crude oil on a 15-minute or half-hour chart, you see the pullback that we had yesterday at the 43.60 level was a perfect 61% retracement, and now we're approaching the 44 level. We came very close to that today. If you bought the oil, what you want to do is to basically come in and go in and look at the area of 43 as a support. I would put the stop at break even. That way you're in a risk-free trade. And as we're speaking here, we just took out those highs in the euro. So this is going to be an interesting thing to watch here. We just took out those old highs at 1290. So this is going to be a very, very interesting thing to watch. This is similar to what we had happen in the bonds when they broke above the 157 level. So pay attention to that. That's a very important thing to look at. This is causing stocks to sell off. As you can see, the Dow's starting to drop a little bit here on the opening price. So all this is all very, very interesting. But this is important here, what's going on in the euro, much like it was in the bonds when we were looking at that. That's from my 2 cents worth, folks. So just remember that it's just technical analysis that we're looking at right here and nothing more. Regarding another question just came up about the grain markets, folks. We had a bottom probably on Friday, and it doesn't look like it's much of a bottom because all we've had so far is a quick 2-day rally in the bonds. And I wanted to post a wheat chart. I'm not able to do that, but we'll do that hopefully on Thursday. Tomorrow we'll have Shane Smolian on. He'll be our guest, and we'll watch it. But the thing to keep an eye on, I don't even know if you trade a foreign currency or not, but this euro is really important here at this level of right around this 113 level. We're trading at 112.97 right now, and we did take out those highs. The old high was 112.95. So as a tape reader, that's what you want to be looking at. And I got a lot of that tape reading ideas I got from the book by Edward Lefevre, Reminiscences of a Stock Operator. It's supposedly, and I'm pretty sure it is, the works of Jesse Livermore. It was supposed to be a biography of his life, but he used a pseudonym from what it's told. And Ed Dobson, who happened to know several people that knew Jesse Livermore, verified that, yes, it was a book about his life. So here we've got interest rates, that are going, looks, at least for the short term, looks like they're going higher. And yet we've got the currencies, the dollar going lower. That just does not make any normal economic sense. That's the basic bottom line. If you remember a week or so ago, we were talking about the importance of the Canadian dollar at this 131.50 level. We got down to 131.60. This morning we're trading at 131.96. We're very, very close to that number. We're about 40 pips away. So by the time we get back on the show on Thursday, we'll have Shane on the show tomorrow. But, when we get back on the show on Wednesday, wow, let's get the dates right. That'll be Thursday. Shane on Wednesday, Thursday, and Friday we'll be doing the regular show. We'll have a better idea of whether this breakout is real or it was just basically a Mario Draghi fake out. And believe me, they have their own playbook when it comes to that stuff. They can move the market for a short period of time. That they can do, but for days, is just too big a market, folks. It's just a very, very large market. You don't want to mess with it. One question about the wheat. If you remember, we were looking at that head and shoulders pattern in wheat when December wheat got to the 507 level. The high was 510 and 3/4, $150 higher, and now it's trading almost $1,000 under where that sell signal came in if you were able to do that wheat. And it looks like it wants to go lower. It's setting in a small 61% retracement here in wheat this morning, but it looks like it wants to go lower. All we've really seen here on a short-term basis in the grains is a very small ABCD structure over the last 3 days. And if you remember, the new moon in perigee was on Friday at the level of when the beans and everybody was making new lows. So all we've gotten now is a very, very small rally here. The thing that's really, this is what I'm really watching right now, is I'm just watching the action in this euro. We've taken out the old highs at 12.90, and we're trading at 12.95. I would expect this thing to have really exploded to the upside. That doesn't mean it's not going to. It's just mean that it's gone up and knocked out those stops at that level, and whether that's going to cause the market to explode or not, we'll have to wait and see. But this is where you have to give it some time. A few minutes here or there, that's like in the Treasury bonds. You don't really know whether that's going to be, if that's going to be the case or not. Also, we had a question about, is there a possibility? Now we're starting to move. See, we've got some big orders coming in here in the euro. We just popped above the 113 level. That's what we wanted to see. So the old highs were at 12.96. We're now trading at 13.02, 13.03. So keep an eye on that. What's really important is the close is what's important today, folks. And if you're doing intraday trading, if you look at an hourly chart and it closes below that, then that's what you'd be watching. But you don't want to mess with it up in here. You want to wait for those orders to get up there and then see what happens. That's just my opinion. One other question that someone's asked me that is extremely important, that's from our good friend Mr. Z and the Tiger Den. If you take a look, folks, like Jim Twentyman said, defy human nature, do the work yourself. But go look at the gold on a 15-minute chart, and you're going to see a beautiful chart, just like the one that I posted in the Den this morning. You'll see the beautiful ABCD pattern that came in at 12.54. That was $17 off the bottom, and all we've done so far since last night is to come in and make a 382 retracement off of the low that we made 2 days ago at 12.42. So if that can hold, that's telling us that we've got some real big odds here, in our favor. So that's the main thing. What's really surprising here is that we've got the bonds making new lows right now, and we've got the euro making new highs. That is an aberration, folks. That's like putting gasoline on the fire and expecting to, put it out. So we'll see what this means at the end of the day. But this, we did hit this 113 level. We're trading back at that 112.96. It only backed off about 8 pips. 8 pips is, roughly $100. Not really much going on there, but we'll watch it. The chart that I showed between the notes and the bonds over those last few days, I believe that was telling us something that was very important. That's what I think is happening in the U.S. dollar right now, is the fact that we're looking at this, and we'll see if this is going to be the case. I don't know if anybody heard any of that or not, but if you did, may God bless.
hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and opening here in the market, we've got the stocks down a little bit. Bonds are under some pressure, and of course the big move is what's happening with the U.S. dollar circa the euro. We did get up to 113.08 in the euro. We're now trading at 112.90. That's a very, very small amount. That's only 18 pips. Doesn't really mean very much, but the key today is to whether that breakout at 113 means something. That would be the same thing that we're looking at like yesterday in the bonds. If we would have closed above that 157.08, that would have been a valid breakout, but of course the market reversed, and that's basically it. Like I mentioned before, I learned this tape reading stuff from the book Reminiscences of a Stock Operator by Edwin Lefevre. Folks, I have read that book at least 50 times over the last 50 years. I know at least 50. I used to know it by heart, but one of my favorite passages in there from one of the old traders was called Old Westlake, and I lived in Westlake Village, California, which was 22 miles a 22-minute drive from Beverly Hills, and the whole thing, Westlake was a tip giver. He used to tell folks about tips in the market, and what would happen was he would give a tip, and every one of them would fail. And finally the people were saying, God, let's get rid of this guy. And Jesse Livermore would say, hey, or he would say, hey, no, you got to keep him around. And they'd say, why? He's wrong every time. And he said, are you kidding me? He's right every time. Just do the exact opposite of what he says, because the people that are giving him the tips are certainly taking the other side of the trade. So remember, don't be a tip giver and don't be a tip taker, because you got to do your own work yourself, and you have to be able to be responsible, for the trades that you're doing yourself. That's basically, the bottom line. So we'll see if it's going to be interesting. Now it's interesting now because we're down 20 pips in the euro from the breakout. We now broke down to the 112.85. If we get below 112.70, then I would think, yes, this is a possibility that we've seen a false breakout to the downside. But this is real aberration stuff, folks. We don't see this kind of thing where you see the U.S. dollars, going into the sewer, and Treasury bonds and Treasury notes going into the sewer, because if interest rates go higher, people will be clamoring to go to that higher rate, and this is not what's happening today. So somebody is out there with their cash register going, trying to get you to fool something. We had a question about the crude oil. Yes, I believe that if you bought the crude oil yesterday like we recommended around that 43 level, we got down as low as 42.64, which was a perfect 61% retracement intraday basis. I urge you to go take a look at it, but I would put the stop on at break even now in crude oil at 43. You've got a $800 lead in it, and there's no reason to give that money up, because that's money that you've been able to make. So that's the real key, to what we're looking at right here. So just remember that if these things, fail, they fail really big time, and that's the whole secret, is not to get involved with any of these things. I think I'm back in the den now. That's my guess. That's what they're telling me. So we'll watch it very, very closely. The key to this, folks, is let me think where we really are here. And this is with this euro. Let me put this up here again so you can take a quick look at it. I can post the chart now. And there you go. You'll see this is the euro. You'll see we went up and we touched that line again at the 113 level. You see that little downtrending line that you have right there? All we've done now is taken out the highs of the last 3 weeks. That was the stops. So we're there at that 112.97. We got up to 113.05, and now we're starting to back off. If it closes to the downside, this would most probably be a false breakout. That's most probably what would be happening. So that's what we're looking at. Hopefully everybody can see my charts now, and we should go. Yeah, it was the Russians. You're right, Matt. I believe it was the Russians also. So we'll wait and see what's going on. Let's just look at this dollar index just to show you the importance of this, because this is either a major test of the U.S. dollar index, folks, or we're getting ready to see some really big fireworks. That's something that I think you got to pay close attention to, if nothing else. But watch that 113 level in the euro. If we close above that, that's going to tell us that we do have legs in the market, and that would give us an idea that we are probably going to go a lot higher in the euro. And that's not what the charts are saying today, folks. The charts are saying that the top is, the major top has been hit here in these Treasury bonds and Treasury notes. So you want to take a look at that. This is a very important chart. You can see we had a head and shoulders pattern in that Treasury notes, and yet we had a false breakout, is what it appears to be, in the bonds. So that's it. Okay, let's keep an eye on that, because this is where the things will help you as far as your what the news is telling you, because this is really different today, folks. I mean, it really is. I mean, you've got interest rates are going higher, which means people should be buying the dollar, and somebody is selling the dollar, i.e. buying the euro. Now, if that's the ECB and they did something like this, they could have made a huge mistake in the market. In other words, they went in and tried to get it moving, and it just didn't move. And believe me, they can do things like that for a short period of time, but not for a long period of time. That's the bottom line that you want to remember, that they can't do it over a very long period of time. So this is what we're watching. Another question about the crude oil. Folks, the reason why the crude oil looks so interesting was because of the cycles that were there. We pointed those out yesterday on the show and certainly in the newsletter. I'll bring it up here to let you see it again. And you'll see that, there were some really nice cycles coming in on crude oil. You had your ABCD patterns were perfect. The CD legs on both of those moves were exactly equal in both price and time. And that means that it came down in the same number of days in CD as it went up. And so, or as it came down, both of those were equal. And that really tells you the rate of change of what the market is doing. If you multiply, the amount of time that it went up into the price, you're going to see that the number of, in other words, it was coming down at the same rate of change. If you'll notice here, this is about a 75-degree slope, so it was coming down in equal in price and time. This was something that W.D. Gann spoke about many times, over those things. But the real key level to watch in this, they're posting this in the Tiger Den with all the smart folks in there, is at 44.25. That's correct, because that's where you're going to get your first ABCD structure to come in. We're trading around 44.80 right now, so it's quite a ways away. But 44.25 is the breakout level. And again, if we go back below 43, you don't want to have anything to do with that. Folks, if you bought the crude oil, you got an $800 profit. You don't want that to go to a loss, because that's your money. And don't put your stop at break even and not worry about it. That's that's basically the bottom line of what you should be trying to do. So keep in mind, it's all about risk control. It's not about how much money you win or lose. It's how much money you don't risk, and that's the key to looking at it. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and there's some talk here in the den about the central banks, all the central banks, whether it's Japan, Europe, any of them. They are private banks, folks. Remember, they're not working on your behalf. So what they say and what they do can be totally different. So just keep that in mind. That's why we use the motto, trade what you see, not what you hear. That's the main thing. Now, we have some questions here about the Treasury bonds. We're now down a little more than a point from the high. The first question is, where would be, major support in this bond market? And if you just go back over the last few days, you'll see that the 61% retracement that we made just the other day, which was 10 days ago, comes in just a little lower than where we are right now. That comes in at the 155, almost 156 level. So we're very close to that 61% level, if that is the case. And it's still a little bit early, but that's really what we're looking at. The German Bund I'm not able to bring up right now, but the German Bunds have looked very bearish from the very beginning. If you remember, we posted that German Bund chart in there about 2 weeks ago, and it was making a perfect Gartley at the 786, and it really gave up the ghost. So the key level today is watch that 155.28 level. And believe me, this is the first day down after a potential breakout. I wouldn't buy that. I might cover some short there, but I wouldn't buy any at that point. That's basically what I would be watching here. So those are just some of the things. The key is that euro. What's that euro? If it closes above that 113 level, that's going to mean something, folks. That will be serious. But the fact that we took out those stops at 113 does not mean that much. That's my opinion, of course, but that's what we're watching, because there's a big discrepancy today between what's going on in the market and what they're telling you, because interest rates are going higher, i.e. lower bonds, and what's happening is we got a strong euro. That's an aberration. So somebody's causing that. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
TFNN. Headline News Update. Here's Tom O'Brien.
Welcome back, folks. We have the Dow Industrials right now down 15, Nasdaq's down 29, S&Ps are off 4.5. We have the gold contract up $3.80 at $12.50.20. Silver is up 18 cents, $16.59 an ounce. You got platinum up $3.90 at $9.20 an ounce. Light sweet crude up 34 cents, $43.71 a barrel. Notes. 10-year note down 14 ticks, 126.10. 30-year bond off almost a full point, 28 ticks, 156.01. Now, notes and bonds, they are pulling back, and they have some volume behind the move. The differential, they're not going to have the amount of volume that they had with strength, however, because the notes are going into 2.4 million contracts as well as 1.5. Bottom line, though, you might have a little change of pace here. King dollar. King dollar's getting toasted, roasted, all of the above. That's down 646.6. You're at 96.460. That is building cause to get down into that 95 area. You have the wide price spread. We have the volume behind the move. Bottom line, if we close it down here, which I expect we will, that's going to go right after the swing low from last week. You break that, you're going to be at the 95 level in about a heartbeat. The euro's trading at 112.86. That baby is breaking topside. That wants 116. Now, the intriguing thing about the 116 on the euro, if in fact right now this thing has wide price spread and it's moving good, you get 116 on the euro, that is saying longer term, which may be a very short time inside the dollar aspect right now, that would be a 91 on the dollar. The yen is trading at 112 to the U.S. dollar. We get over and we take a look at the SPY. What you have is this. Yesterday had the SPY fail on price, fail on volume. Bottom line, you got into the highs of the last 3 weeks, couldn't handle the price. Now we'll see how it can handle the downside. So we're dealing with your 242.81 inside the SPY. Now you're dealing with that swing low out here from the 16th. The top of that swing low is right where we are right now. Now you need an expansion of volume up to about 80, 90 million shares. We'll see if we get the expansion of volume. Dow Industrials, same type of setup inside the Dow Industrials. Dow Industrials also failed on price and volume yesterday. We'll see if there's any action on the way down. The composite, the NDX 100 and the composite look like they're going to lead this baby, folks. So we'll see how this shakes out. So the composite, as well as the NDX 100, that went into the downdraft from the 9th of June. That's where they got smoked. Bottom line, couldn't handle price yesterday. They sold it. They opened them higher, sold them off all day. We'll see how this shakes out today. If you do not get an expansion of volume out here today, guess what? This thing is going to run right up to the highs again as we come into the 4th of July. We go take a look at the 3 Qs, because what you also have, by the way, is at the end of this week, you have window dressing as well as coming into the 4th of July, and markets just love being bullish in the 4th of July. The Qs. Couldn't handle price yesterday. Right now, we are going into the lower end of this consolidation. And if we see an expansion of volume today of about 40, 50 million, that is saying that the Qs will have a chance to make it down to this lower end, which is 137.47. Now, thus far, you do have volume inside the NDX 100. The gold contract, what do you have with gold? Gold contract is trying to get up into this 1254. We hit 1253.80 today. It does have the volume. I expect we're going to be back up there. Notes. We go take a look at the note, and this is where the text has changed a bit. The notes are coming down with volume. That being said, it doesn't look like they're going to have the amount of volume to basically break this uptrend. I'm talking about not the uptrend since 1980. I'm just talking about the uptrend going back till April 14th. March 14th, rather. Bottom line is that you're coming into 126.10. There's 2.4 million contracts there, and then there's 1.5 at the highs of 126.05. Doesn't look like it's going to break it. King dollar, get out the peanut butter, get out the jelly, all of the above, folks. They're selling that baby down. They're selling it down with volume. We are at 96.470. You get the 96.200. That thing's going to basically break and break hard. This 10 a.m. update is brought to you each and every day by Everbank. For more information on the products they offer, you can give them a call at 855-750-4051. Or visit everbank.com/TFNN. Have a great one. Have a safe one. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.